first and only insurance of its kind that insures plaintiff lawyers for all the costs that they spend in case they lose a case at trial. It really is a true innovation because as a plaintiff lawyer myself, I used to invest all of my own money in case expenses. And it wasn't until the invention of level insurance that plaintiff lawyers had an opportunity to level off that risk, to put that risk onto somebody else, onto an insurance company. So you take that risk, you go to trial, you spend all that money, you spend all that time. You're never going to get paid for the time that you spend, but at least if you have level insurance and you lose the case, all the money that you invest will come back to you for a very inexpensive and reasonable premium. It's only 7% of whatever you choose to insure. So as a lawyer, you typically know how to budget whatever it is that you think it's going to cost you for your case expenses. So for instance, you do an auto case and you think you're going to spend $10,000 to get to trial. That $10,000 policy costs you $700 or 7%. If you're doing more complex cases, premises liability, medical malpractice, and you think you're going to spend $100,000, for instance, that $100,000 policy costs $7,000. And we insure up to $500,000, so you can go pretty high. There's not that many cases that cost more than $500,000, like the single one-off cases that cost more than $500,000 to litigate through to trial. And the good thing about level is that there is no adjustment at all for reasonableness or necessity. So all plaintiff lawyers know that insurance companies like to whittle down the damages. They like to figure out a way to pay less. The way that we wrote this policy was very clear that if you lose the case, whatever you would have submitted as your closing statement to your client will be submitted to the insurance company. And if you choose to stay at a very expensive hotel or fly first class, or you pay for a rush deposition, you hire multiple experts in the same specialty, none of that is going to be questioned or changed. No one's going to say, well, that neurosurgeon should have only cost $900 an hour, and you got the guy from Johns Hopkins that costs $2,000 an hour, so we're only going to pay you market rate. It doesn't work that way. And you can see in a separate YouTube video of ours that when claims are made, they are paid quickly and they are paid in full. So it's something that you can really trust if you ever have a problem and you think that you need to insure your cases. But I want to go quickly through the process because one of the great things about level insurance is how easy it is. So I'm going to share my screen here and I'm going to show you. So this is our website, LevelEsq.com. There's two sections. We'll talk about lawsuit cost financing in a different podcast. This is litigation cost protection. And you would think that if you're going to insure all your cases, this must be an onerous process. It must take a very long time for you to get the insurance. You must have to go through a ton of underwriting, but none of that is true. You click on this button, buy a policy, and you get to your choice for states. Now we insure cases in every state except for New York. And the reason we don't insure in New York is they have some funky law that says that if you're involved in litigation related insurance, that insurance has to be specifically allowed under New York law. And we just decided it wasn't worth it for us to pay the money and go through the process to insure these cases in New York. Maybe one day, but just not today. So I'm going to choose my home state of Florida. And you choose Florida and it takes you to this page which asks you for case information. You just enter basic case information. I'm just going to make it up. Jones v. Smith. I'm going to enter my former law firm's information and our address. And you'll see that we use Google tools, so it makes it very easy for it to be found via Google, your address information, phone number, and then I'm having my email address here. You hit continue. When you hit continue, it's going to take you to the second page, which wants the case name. Oh, I'm sorry. Let me back up. See, I'm doing this for the first time here on a podcast. Applicant name is actually me. I apologize for making that mistake. So get back to this. You go to the next page. Then you go to the case information, and this is where you enter the case, right? Smith v. Jones. You can tell I'm doing this live, because otherwise I would have edited out that silly mistake. Case jurisdiction is Florida. Now here, you can either upload a copy of the complaint if you already have it in PDF form, or you can click here that you want to email your complaint separately. If you email this, after you're done, you just send a copy of the complaint to info@levelesq.com. There are some people who buy insurance before they've ever even filed the complaint, which is totally fine. Once you file the complaint, you would then submit it. Then you have the date the complaint is served. Level insurance needs to be purchased within 120 days of service of process. Now, that's an important set of words there. It's not 120 days from when you actually file the lawsuit. It's 120 days from when you serve the lawsuit on the first defendant. And as plaintiff lawyers know, you don't serve a lawsuit the day that you file it. It's typically served sometime the next couple of weeks, month. I know in Florida, you have 120 days by statute to serve the lawsuit. So it gives you a lot more time to decide whether to use the insurance. So you pick the day that you served it. I'll just pick a random day here. And then you choose the case type: auto trucking, med mal, products, contract, premises liability, professional malpractice, or other. So you just pick whichever one you want. To do medical malpractice here. And then you choose the coverage limits that you would like. And I'm just going to pick a random number to show you how you don't need to do even numbers. You can pick whatever you want. So $57,345, just a random amount. And then when you get to here, this is interesting. We developed this about a year and a half ago. In addition to the cost coverage, you can also choose to cover yourself for income that you wouldn't earn if you lose the case. This is the first time that I think anybody's ever offered plaintiff lawyers a chance to actually earn money on a case that they've lost. And this is what we call optional fee coverage. This gives you the choice to get up to 20% of whatever cost coverage you had in supplemental fee coverage. So it automatically calculates that 20%. I'm just going to choose yes, and then you can choose the amount up to that 11,469. That premium is an additional 10% of whatever amount of fee coverage you choose. So I'm just going to skip that part for now so I can show you the cost of the litigation cost protection coverage. But just know that if you're interested in also covering some portion of income, you can do that as well. So then you hit the continue button and it takes you to a couple of eligibility questions. The first one is, has the first chair attorney, other attorney, or plaintiff ever been found in violation of Rule 11 or the state court equivalent? I'm going to click no. Has any of the attorneys been disciplined by the bar in the past 5 years? Now, if you answered yes to either of these questions, it is not an automatic disqualifier. You will be given an opportunity to explain it. And the way that the underwriters look at it, as long as it hasn't been involving like a trust account violation, theft, things that are very, very serious, then we may be able to still approve the policy. It just needs to be looked at a little bit more deeply. Has a jury trial been demanded? We insure both jury and non-jury, so this is more of a data collection question, but it doesn't matter what you select. Most people are trying these cases to a jury, so I'll select yes. This here is, has the applicant submitted a claim for litigation cost protection within the last 5 years? We recently added this to the application form to track folks who have actually made claims. The insurance carrier wants to know who's made claims, how many claims they've made, so this particular question is designed for that. We haven't had a lot of claims, but we've had, some, so they just want to make sure that we don't have habitual claim makers here. And then this was added after COVID-19. I don't know if it's applicable anymore, really. This was the insurance carrier's concern with loss of business use type of claims that were going to be filed against insurers. We'll likely remove this, but for now, we do not insure cases where the claim is for loss of use under an insurance policy. Then you hit continue, and then it gives you your quote. So it shows your name, state, case name, the policy type always says plaintiff, the jurisdiction, the policy limit that you chose, the date of service. Then it gives you your base premium, which is 7%, a policy fee, which is charged on every policy, and then every state has different taxes. Florida, for instance, this is calculated for what we have to remit to the state of Florida, and then you get your total payment. After you get your total payment, you can do one of two things. You can either save the quote. If you save the quote, it's going to send you an email with a completed quote with a link. That way, when you decide to purchase the insurance, that quote will be ready there for you to purchase. You'll get an email reminder every once in a while from us to remind you that that quote is still there. And then at the 120-day mark after the date of service, it will expire and you'll no longer be able to purchase it. You can also proceed to payment. When you proceed to payment, it goes through application criteria. It tells you that this is going through the excess surplus lines, which means that it is not a state admitted carrier. Most niche products that aren't homeowners or auto insurance, a lot of them go through the excess surplus lines. So this one does that through Aspen Specialty Insurance. You click that you're aware of that, and then you just write your name under the surplus lines disclosure, and you continue here to your payment. Now you can either pay in full. If you pay in full and you continue to that, it's going to ask you either to pay with a credit card or to pay with a bank account. If you pay with a bank account, it's going to ACH the bank information. If you pay with a credit card, it's asking you for the credit card information. Now, most insurance policies cannot be paid for by credit card, so ours is fairly unique. It's something that we insisted upon so that lawyers could earn points and could at least get something besides just the policy when they purchase. You can also pay down a down payment and then finance it. Now, we currently use a company called First Insurance Funding, which takes a 25% down payment and then has 8 level payments at I think about a 9% interest rate. However, through our company Idea Financial, which is the small business lender, we are soon going to be offering interest-only financing on insurance policies that last for 24 months so that you don't have to pay any principal on this insurance for 24 months, and then it will amortize over the following year. You can always prepay, but this, I think, we thought this was a good option for plaintiff lawyers that didn't want to pay the premium up front. They wanted to space it out over the course of the entire life of the policy or the case, excuse me, and then pay once the case has resolved. So this is going to be an option that will be launched very soon. And it's also important to note, then you come here and you can pay, and then you're finished. That's it. Once you pay here, the insurance will bind and you'll be done. So you'll have the insurance policy there and you'll be done. A couple of important bits of information besides just the insurance itself is that Larry Basuk and I, my co-founder, we're both lawyers in Florida. And we thought that this insurance was the type of insurance that should be able to be passed on to the client, meaning the premium. Because besides offering a benefit to the lawyer, we firmly believe that this insurance provides a tremendous benefit to the client. It gives the lawyer great bargaining power. They can use this in mediation and say they're not concerned with what they have to spend because all their costs are insured. And it allows the lawyer to really go the distance. When cases start to get a little bit questionable, if something takes a wrong turn, you're not discouraged from spending the extra money to bring the expert in personally rather than doing a video deposition. You're encouraged to travel and look at the experts face to face. All these things, you're encouraged to do mock trials and focus groups, all of which enhances the value of your case. But sometimes those may be expenses that you don't want to spend because the case is getting more and more expensive. But because of all the benefits that this insurance provides by allowing lawyers the freedom to spend what they need, knowing that they're protected, we went to the Florida Bar and we achieved an opinion from the Florida Bar Board of Governors that says that the premium can be passed through to the client as long as it's disclosed in the client contract. And since that time, the states of North Carolina and Utah have found similarly using the Florida opinion as precedent. And lawyers all over the country now with those 3 opinions feel comfortable putting this in their client agreement, letting the client know that they're going to pass the expense on and then charging it to the client at the conclusion of the case. Again, that's a personal decision for the lawyer to make, but knowing that that's available makes the cost of this insurance really net zero. Because at the end of the case, either A, you're going to get your premium back if you settle, or B, if you lose, you're going to get all your expenses back. So it really does give a great benefit to both the lawyer and to the client. To date, as of the time that I'm filming this video, we've sold over $100 million worth of policies to lawyers in 49 different states. And we have had a tremendous track record with attorneys, lawyers doing things from threshold auto cases to med mal to big product liability cases. Law firms that have 1 lawyer and law firms that have 100 lawyers are using Level Insurance to their benefit. And it's something that is growing every single day. So we hope that you have an opportunity to use it. Level Insurance is an absolute game changer for plaintiff lawyers. I know that when we were practicing and also had the company at the same time, we used it ourselves because it is something that makes you feel comfortable as a trial lawyer to really go to the mat. You know, defendants have big insurance companies backing them all the way. This is the first time that a plaintiff's lawyer can say that they have insurance covering their biggest risk. So if they lose a trial, they're not going to lose money for their firm. They're not going to lose money for themselves. It's just going to be their time and their fees. So it changes things dramatically for the plaintiff lawyer. And we hope that you'll have an opportunity to use it as well.